name is Soumya Sarkar और आप देख रहे हैं Wealth Redefine blog. In today's blog, we'll be talking about a very important topic which actually in the most of the investors' mind is that how the market is going to behave from here onward. Whether it will see more correction or it will see a upward trend or the correction has already been done or whatever it is. Let me tell you, if you look at the US market, which is mostly is Nasdaq and Dow, but if you look at the Nasdaq one, Nasdaq has almost corrected 10% from its lifetime high. So that means people have started taking out the profit from the market. But if you see the behind the scene of the correction, it is because of the Fed decisions. Fed has already said that they are going to hike the rate sooner than expected. It means that inflation becomes a big worry for them. If you look at the US data, the inflation has gone up to 40 years high. That means in last 40 years, US have not seen this kind of inflation. So obviously, inflation is a biggest worry for all over the globe. Now, and that is one of the reasons that US is going to hike the rates. Once rate hikes happen, obviously the easy money which is available to investment or available to funding the startups and all those things is going to dry. With all those things which are going to dry, we can see some correction in the market. We have already seen there are correction in the markets. All over the globe we have seen the correction. But this time, market has started discounting the US Fed hike. Now, depending upon how aggressive they are, we may see some further correction. If they are not going to be that aggressive, we may not see a major correction. Now, come to the point of Asian part. If you look at US has talking about hike the rates. China, opposite side, one of the major economy after US, has started reducing the rates. So you can see both are going on a opposite direction. So US is hiking the rates to control the inflation. China wants the growth to happen, and that is the reason they are decreasing the rate or they are cutting the rates. Once the rate cut will happen, obviously money flow will happen in the system and stock market will boom. If you look at recent time, the Hong Kong market has started doing well. I think when we are recording this video, today, the Hong Kong market is approximately up by 2.5%. If I take about the 1 month thing, then it is up by approximately 9%. So that means that China is starting reducing the rates to increase the flow in the economy, while US has started doing the opposite thing. Now come back to the Indians part. India is definitely there will be outflow in terms of if the US hikes the rate and money will move out. But in Indian case, we have observed that retail investors has become very active. If you look at lot of retail participation has gone up in last 1.5 years, 2 years time. So we had approximately around 8 crore demats which are available. We have approximately 2.5 crore of mutual fund investors. Your SIP book has gone up from 6,000, 7,000 crore per month to 11,900 crore, almost 12,000 crore. Looking at all those things, I feel that Indian market may not see a significant correction because of retail participation and some kind of DII and institutional participations. But FII participations may go down or API participation may go down. But remember, the APIs are taking out from the money from the market, but they're not leaving India. They're putting the money through VCs, channels and all those things and actively investing in India. So looking at this scenario, I think investor needs to be cautious but should not be in panic. Because if you are holding it for a long term and if you approach it on a systematically way, I think you don't require to time the market. You can create the wealth over the period of time. Obviously, the unprecedented growth which we have seen in last couple of years, so probably in 2020 April onward and 2021, you may not see that kind of return anymore. But definitely you can make a decent return on a 3-year horizon if you are actively participating in the market and you have the patience of holding that money for a longer period of time. You may think that small caps and mid caps are a bit expensive, while large cap has come down. It is still expensive, but it has come down. Few of the sectors are not that expensive. You may move your money according to them, and you can take the exposure in those sectors on a regular basis. But I would again recommend, which I always do strongly, that depending upon your goal, you should approach your investment. You should talk to your financial advisor, or if your investment advisor, tell about how it should be approached, and then according to his suggestion or her suggestion, you may take the positions into the instruments where your goal can be achieved. You should not be adventurous at this point of time, and rather follow a goal-based and systematic-based approach towards the market. You can start buying on every fall if it permits, and if it been advised by your investment or financial advisor. You should not invest based on YouTube videos or paper cutting or recommendation on WhatsApp or anything. You should have a proper way of investing plan, and that's the way you can make the money in the long term, or rather you can create the wealth in the long term. Thank you for watching the video. If you like it, you may subscribe to the channel. You may send us comments through mobile number available, or through the email which is available, or you can send us through WhatsApp messages, or whatever way you can. You may share among your peers, and if you like it, you can send us comments, which we will try to resolve your queries whenever we can. Thank you for watching the video again. Namaskar.